Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I wanted to do something slightly different, okay? So today I want to talk about selling the top, expectation versus reality, because I think hopefully if I do my job right, this should make you a better trader, this should make you more able to deal with the tops as and when they arrive. So what I want to talk about is the disconnect between me often coming on here and nonchalantly saying things like, yeah, I'm just going to wait for the third angle to form, sell the breakdown, flip short, and then short the top, right? I nonchalantly say that as if this is no big deal. But the reality is, if of course it was that easy, then wouldn't we all be able to sell the top? Wouldn't we all be able to flip short? Wouldn't we all be able to deal with this in real time, no problem? But the facts are the facts, as I'm sure you're well aware, that roughly 90% of market participants get this completely wrong. So I want to talk about the difference between saying it and actually doing it. And then I want to run through some bar replays and show you just why it's so difficult in real time. Because the key point here is when we're looking back in hindsight, we have a much bigger view of the market. We can see the top was the top and what happened thereafter. Versus when it happens in real life, tops don't actually look like tops until it's too late, essentially, right? For the first dip, when a major top occurs, looks like a dip in a bull market. Then we get a counter trend bounce and it rolls over. And as you're going to see, it continues to look like it's possibly a buyable dip until very, very late after the fact. Only after the fact does it become obvious to everyone. And so I'm going to talk about just why it's so difficult to deal with it in real time, what we can look for, some subtle hints and tells from the market. And like I said, I'm going to show you a few worked examples. So for anyone that's been here any length of time, you will know that one of my preferred methods to exiting markets, particularly if they give us a nice clean setup, such as a blow off top, is to use 3 increasing angles of attack. So the market forms the first one, then a bit later in life, it forms a second, steeper angle of attack before ultimately culminating in a near vertical, third and final blow off top angle. So the price would do something like this to start with, and then it would accelerate in a steeper trend, and then it would go near vertical into a blow off top before it breaks down. And ideally, then we come back at least to test, if not to violate, the first angle. So when I say this, like I often do on this channel, and I say we're going to wait for the third angle, I'm going to sell the top here and flip short with a stop above here. Like I said, it's pretty nonchalant of me to just pretend like this is no big deal, okay? But as you're about to see, in real time, it's a lot harder than I'm making it out to be. And I'm going to show you just why and also how you can prepare for that. So I thought, first of all, it would be useful to point at one of the best and cleanest examples of a blow-off top with 3 angles I've ever seen in my entire career. And that is Bitcoin's 2017 blow-off top bull run, okay? You can see the first angle here, okay? We respected that for some length of time. Then we got steeper into a second angle before ultimately we set a third and final near vertical blow-off top angle. And of course, on a breakdown here, this was a sell signal. This was an ability to flip short and then watch the market go on to ultimately put in something like an 80+% bear market between the top and the low in 2018. So here's the key point, okay? When we look at this piece of data in front of us now, this seems really, really obvious. And some of you who may not have ever seen this before might be sitting there and thinking, wow, I've just cracked the code. I know exactly how I'm going to deal with the upcoming top and I can't wait to sell the top and flip short. But again, stick with me because I'm going to show you just how much more difficult it is in real time. The point I want to make here is the reason this becomes so obvious after the fact is because we are armed with being able to see into the future, okay? We get this entire picture here, which includes not only the first 3 angles, but it also includes being able to see this. So we can easily see in hindsight because we have this piece of future data. In real time, we won't have anything to look forward to, okay? In real time, we'll only be here. And again, you might be thinking, well, that's pretty easy. If we get 3 angles, I'll sell, okay? But if that was true, then the majority of market participants wouldn't lose money, okay? People continue to buy the dip the whole way down, keep thinking it's going to return to new highs. They keep thinking that the dips are for buying, and very, very few people actually exit near the top and buy back at the bottom. Like I said, this is one of the cleanest examples I know of. We also have an example from the GFC 2007-2008. This is the NASDAQ here. you can see this is not nearly as clean as Bitcoin's, but we set a first angle along the bottom, accelerated to a second angle, and then ultimately set a third and final blow off top angle, which again, armed with the ability to look back in hindsight and thus see what happened in the future, it's very easy to identify this as a top, okay? It's very simple to say, yeah, 1, 2, 3 angles, trendline breakdown, that's the sell signal, short the market with a stop above the highs, and then collect this huge 57% downside crash. So on paper, and again, when I nonchalantly talk about selling the top and flipping short, it seems pretty easy, right? It's always obvious with hindsight because, like I've said a million times already, okay, we are armed with the ability to see into the future right here. But in real time, again, I want to emphasize the point. Most people get this wrong. Most people buy the dip the entire way down. It's only when they get to about here that they realize, oh, actually, the top is probably in and I'm way too late. And then psychology becomes your worst enemy because in here you go, well, it's already down 25, 30%. I'm not selling now. Makes no sense now. I should have sold up here. I'll just keep holding. And of course, the thing keeps falling forever. By the time you get down here, you're so worn out emotionally and mentally that the only thing you can do is sell and walk away. And that is how you end up losing your entire account. That is how you end up getting absolutely crushed. And that is the majority of market participants, unfortunately. So now what I'm going to do is use a bar replay to walk through this one step at a time and show you, number one, why it's much harder to deal with in real time. And number two, I want to talk about the psychology whilst we are trying to find tops. And then number three, how you can use this technique now and study these kinds of things to be better prepared later in life in case we do see a blow off top form in the not too distant future. So if I grab my bar replay tool and we come back somewhere around this neighborhood, let's say, okay. Now, the first thing you'll notice is at this point in time, despite having just come off the dot-com bubble bursting and despite having all the bearish sentiment that you're always going to get at the lows, okay, notice how pretty much every dip is for buying, okay? We get a breakout, we get another breakout, this is for buying, this one right here will likely resolve to the upside. So we're clearly in an uptrend, dips are for buying the whole way up so far, okay? Now, notice what happens if I start to replay these bars in real time, okay? You'll notice that so far, so good, okay? We're still making higher highs and higher lows, okay? We're getting ready to squeeze above. We make a new higher high, continuation of higher highs and higher lows the whole way, right? And again, I can draw loads of trend lines in here to say breakouts are for buying, okay? Dips are for buying the whole way up, it seems, okay, in real time. And we get our first major correction. And once again, this thing is likely to repair because dips are for buying in an uptrend, right? So you can see, work our way into the trend line, we break out. And once again, things looking okay, right? This is still an environment where you can buy the dip, you can buy the breakout, we've got an uptrend, and you want to be buying the dips in uptrends. And so as this thing continues to play out, there's always, on every dip and shakeout, there's always going to be doomsayers and bear posts and top callers, right? But the reality is, you don't want to fight the trend is up. So again, the more that we see dips, the more we are trained and conditioned to say, yeah, we know what to do, draw a trend line and buy the breakout, right? The market starts to squeeze, it continues to squeeze higher and higher and higher. And then it's in this kind of neighborhood that you'll notice we've set a second angle, but at this point in time, still notice that emergence from bases here, okay, dips are still for buying. So let's zoom in a bit and see what we've got. Now we've got two angles set. This dip is still for buying. The breakout is still resolving to higher highs, breakout retest resumption, and off it goes, okay? And it's not until this final push in this kind of neighborhood where we set our third and final blow off top angle. I'm going to slow this down a little bit. And the market continues to squeeze higher in this third and final angle. Now remember, up to this point, every single dip has been for buying. Every single dip, if you drew a trend line, if you bought the dip, okay, if you bought the breakout along the way, the entire time, that was the right call, okay? So you've got to think your psychology at this point is every dip that you potentially got bearish on was actually a dip that should have been bought. And now we continue to see this third and final angle come in until ultimately there, it breaks down. Okay, this is where it gets super, super difficult to actually sell tops. So far, every single one of these dips was for buying, okay, including this one that quickly wicked the second angle. But the thing we've got to pay attention to here is ever since back in October of 2002, and we're now at something like November of 2007, okay, for this entire bull run, everyone that got bearish on dips was wrong. And why couldn't this have been the third angle, okay? This could have been the third angle in here, and it broke down, quickly went on to make a new high. Okay, we could have done this here as well. Was this the third angle? That could have broken down, okay? But again, if you'd have sold and gone max short here, we'd have gone on to make significant new highs. So in real time, it's a lot harder to actually execute on this kind of strategy, Okay, and now we get this big dip, and notice what happens once it gets to the second angle of support. It bounces, okay? It continues to hold support for a while. This right in here is everyone saying just buy the dip, just like every other time we had a dip. Every other dip was for buying. We've got no reason not to buy the dip off of support here. You'll also notice as the candles continue to play, it starts to look an awful lot like a recovery is possible. We come into support again, and support continues to hold. Okay, at this point in time, everyone's thinking buy the dip. This thing is sure to break out any day now. And of course, it continues to squeeze, continues to look like it's going to break out. And then all of a sudden, we get a second angle violation. Okay, now, once again, like I was saying, it's super easy to say it after the fact when we can see into the future and we know what comes next. But in real time, okay, the average market participant is not trying to call tops here. In real time, the average market participant is thinking, maybe this is a fake out, just like this one was back here. The average market participant is also thinking, well, a logical target would be a touch of this first upward sloping red support line, okay? So maybe this is just going to come all the way back here and have a nice bounce and then break out of that downward sloping red, and off we go again, okay? At this point in time, there's no rhyme or reason to be calling tops. At this point in time, it started off looking like a small dip. The small dip didn't break out to new highs, so perhaps then it's just an ABC correction into the first angle, and then it will break out, right? So this is where everything gets really complicated. This is where it becomes super hard in real time and in real life to deal with this, because we can't see into the future. And again, you let a few candles play out and it seems like, oh, I know what's going to happen here. It's going to hit support and bounce. And sure enough, it does. That support holds initially, right? Double bottom on the support, happy days, okay? We know what comes next. Support is holding for multiple candles now, okay? Again, people get really bullish. They buy at support, and that would have worked plenty of times in this uptrend. But after the fact, okay, suddenly support stops acting as support briefly. We chop it around, okay, and now we're getting a push. Again, every one of these pushes excites people. They go, look, support held, support held. I know what comes next, right? A big breakout is coming in no time. And so we continue to let the candles unfold, okay? It starts to look more and more bullish. At this point, people have had since 2002 to buy the dip. They've been trained the entire way up that every dip is for buying. And now, not only have we got a nice sizable correction, support has held, we chopped it. This makes people think it was a fake out. We're now breaking out, okay? So happy days, right? Long and strong. And of course, what happens thereafter is we quickly make a lower high and then roll back over. So you can see in here, there's still a whole heap of reasons to be bullish. There's still a whole heap of dip buyers. There's still a whole heap of people that never wanted to short the top, were buying the dip the entire way down. And it's only until we get to about here that now things start to look more confusing, right? Now we've got breakout, retest, possible resumption, another touch of support, which has held all the way back since 2002. We continue to let the candles play out, okay? And again, we can still be making arguments in here that support has held. Not only is support held, we seem to be trying to make new highs. We seem to be trying to get a breakout, okay? And now is where the pain starts to really arrive. Now we get true technical breakdowns. And as the candles continue to play out, you can see risk starts to happen incredibly fast. Risk starts to happen incredibly fast. And by the time we get down here, now everyone is kicking themselves for buying the dip the entire way down, okay? It's only in here, okay, that people have decided maybe I shouldn't have been buying the dip, okay? Maybe I had no technical reason to be buying the dip. Maybe I should have managed my risk better. Maybe I should have used better stop losses. And by the time you get here, like I said a bit earlier on, the psychology is, well, I should have sold here. No way I'm selling down here, okay? And then if we speed this thing up a bit, of course, we all know what comes next. We see continuation of downside. Markets get a lot worse because risk continues to happen fast, and everything is not good for some length of time. Now, hopefully you can see why it's important to actually perform damage control and manage the risk. Now, maybe you can see, having seen that last example play, risk happens incredibly fast and you never know what's coming next, okay? Now we are potentially looking for a third and final blow off top angle. Okay, now we're potentially looking to see one final squeeze into a third angle, something along the lines of this, okay? And then when it breaks down, it begs the question, doesn't it? Is that the ultimate top? Okay, does it resolve like we expect it to with a grind along the second angle before ultimately resolving to the downside? Or does this third and final angle break down only to hit support at the second angle and then go on to make new highs like it did back here, like it did back here? So it's always easy to see after the fact that the top has come in. Like I said, if we go back to Bitcoin, okay, it's really obvious when we can see this portion in front of us that we know that that was indeed the top. But again, if I show you just how difficult this was to deal with in real time, you know, imagine dealing with this in real time and you'll be as zoomed in as you normally are, okay? So you're watching this first trend line hold and you're thinking, happy days, we've got a big rip-roaring bull market, okay? Bitcoin continues to do Bitcoin things. And again, there's going to be, every time there's one of these shakeouts, in Bitcoin's case, these are nothing, right? That's a 30% correction there. This one's closer back here it's like 40% back here, okay? So we continue to do this. We continue to try to zoom out, and then we set this big near vertical angle because it's Bitcoin, of course, okay? But we can stay long all the time. We're holding support at the trend line. And again, we continue to see this thing squeeze up. We continue to see these big 30-40% corrections along the way. And there's another one here, of course. There's another big correction, 39%, something like that. And then we finally set this third and final near vertical blow off top angle. Okay, so now I want to slow this thing down. Now, of course, we all know what came next. We all know that this was the ultimate top. But again, we've got the ability to have hindsight here. Now, just imagine you're dealing with this in real time, okay? Let's just imagine this is what we've been dealing with. And let's tick through this a few candles at a time, okay? Notice we get the breakdown. And this is not unusual for Bitcoin. Remember, we've seen 30, 40, 50% corrections the entire way up. So whilst it seems easy to say I'm going to sell the third angle, every 30 or 40% correction has been met with people online saying, just buy the dip, just buy the dip. This is what it does. It's going straight to $1 million a coin or 300K or whatever the number is, right? And you can see in here, it doesn't look an awful lot like it couldn't morph into one of these prior corrections and dips, right? So again, it speaks to, this is how the majority of market participants are wrong-footed, because they are buying the dip the whole way down. Some of them bought the dip down here and then got a quick bounce to 16K, and they were laughing all the way to the bank. But unless they were quick to sell, unless they knew what to look for, then again, this thing continues to crush everyone's hopes and dreams. It continues to look like it's about to make a repair and break out to new all-time highs, okay? And so again, you've got these people the whole way down saying, well, there's no way I'm selling yet, okay? We just held the second angle now. Okay, take a look at this. So in real time, this is what we're dealing with. Now, this is, hopefully you can see, the reason why so many market participants get it wrong. This is the reason why it's so hard to deal with. When we've seen this correction back here, okay, and it resolves to the upside. Same here, same here, same here. When we've seen it so many times before, same here, then all this looks like so far is a big shakeout, okay, a big correction, buy the dip, second angle is holding, happy days, okay? And this is why so many people get these kind of trades wrong, because it does look incredibly bullish, okay? We've been in an uptrend for a very long time. There's no real reason to doubt it at this moment, okay? So this is why dips continue to get bought. We see we do not make a technical repair. We also lose this second angle, and then things start to get really bad really quickly from here, okay? Again, it kind of looks like it might be a buyable opportunity. It kind of looks like it wants to break out. We even get a little fake out. Let me extend this line so you can see. Okay, look, we even get a little fake out here. And as the thing continues to play out, you can see there's hints from the market, okay, because this high is not a higher high relative to these highs. So there's always going to be arguments to say, just buy the dip. We're making higher lows, and surely a higher high comes next, especially because we've got a breakout. And then, as you can see, this thing continues to move over. It continues to slowly but surely roll over. We make yet another higher low here, again, enticing people to buy the dip, before ultimately we start to continue to just bleed and bleed and bleed and bleed. We've set a new area on the chart that we need to repair now. And again, we get another fake out to the upside. Okay, more and more people saying, there you go, told you to buy the dip, right? Only for the breakout to continuously roll over and fail. Remember, by the time we lose the third and the second angle, the target becomes at least the first angle, if not below that. And again, in here, people are going to be saying breakout, retest, possible resumption. Okay, there's more hints from the market because each time we're making lower highs if you know what to look for. And again, there's also an argument in here that we've got a massive support level right around the 6K level. Okay, you can see everyone is eyeballing this 6K to be the bottom. Everyone thinks there's no way 6K is going to fail to hold. 6K is clearly the floor. Buy the dip, bro, buy the dip. Rip roaring bull market is coming in the not too distant future. And of course, then we start to see a big breakdown, not only of the 6K level, but we even lose the first angle as well. Okay, breakdown, retest, resumption of the first angle. We get all the way down to the 3K neighborhood. Okay, some small counter trend bounces along the way. But as you can see, it takes a very, very long time for people to actually realize they completely stuffed this up. They completely missed the top. They bought every single dip on the way down, and the dip just kept on dipping. So in real time, This is super, super, super complicated to navigate. You have to have true conviction in your base case hypothesis. And most importantly, you have to have a base case hypothesis. This is one of the reasons why I spend so much time on this channel presenting my base case hypothesis and my overall framework. There's a reason I have to have a framework within which I can work. If I don't have some kind of framework to work within, then I am just trading blind. I have to have a base case so that I can have something to look back on and say, this is how things should be behaving if I'm right. And then if invalidations start to occur, we can start to look at where I went wrong in the assessment. We can start to look at maybe adjusting the framework. It doesn't really matter what it is. It doesn't matter about being right or wrong, but you must have a framework within which you can work. So this is why I spend so much time covering this. If indeed this framework is right, then we should be getting our 3 angles of attack, okay? We've had our first one, we've had our second one with a violation to the downside, and we should hopefully be about to set our 3rd and final blow off top angle. Now, if this is the case, I do want to be treating this like a blow off top. I do want to be exiting the markets, flipping short here, but make no mistake about it, just because I flip short here doesn't mean we can't come down here and then make another high, okay? If the liquiditists are right, if the up only till next year or the year beyond is right, then there will be some breakouts that have to be bought along the way. So it isn't as simple as just saying I'm going to flip short and then go away for 2 years, because if I'm wrong about this base case hypothesis and we are going to have a bull run that runs into 2026, then the last thing I want to do is be short here and then just leaving the markets, right? So as you can see from the prior 2 examples, it's incredibly difficult to deal with in real time. We still will have to check in on the base case almost every day. We still will have to be making sure that we're not too trigger happy. There will be plenty of counter trend bounces along the way that we'll have to play with very tight risk management. In fact, you could see me do this when I first launched this YouTube channel. I was playing a whole heap of these bounces along the way down, okay? So along the way down here in this bear market, I was drawing trend lines like this, okay? And then getting long and managing the risk with a near vertical trend line, okay? And I was doing the same thing here. I was drawing trend lines, something like this, buying the breakout and managing the risk with a near vertical trend line. I know I caught this one live on YouTube, called out ahead of time, okay? And then again, had to manage the risk with near vertical trend lines like this. So these violent counter trend rallies as well, I think it's worth noting. If you enter a short at the top, it seems like it would be easy to hold, okay? But these counter trend rallies, this was a 12.5% rally in 23 trading sessions. This one from the low to the top was 40 trading sessions and it went up 20%. Okay, this one from the low to the top was again 40 sessions and it was a 20% move. So if you're short max leverage, okay, you can easily still get blown up along the way down because the bear market counter trend bounces are very, very, very violent. If we go back to the dot-com bubble, okay, take a look at some of these counter trend bounces. You know, if your short is not perfectly timed, then a 20% counter trend move against your leverage short is going to blow your account up, okay? Risk still has to be managed. This right here was a 25% counter trend bounce. This right here was a 26%. This one right here was a 23%. Okay, so we're going up 26% in 22 days, only to come down 20% in the next 20 or 30 days, only to go up 25% for a major index in about 1 month, only to then fall in about a month and a half or 2 months, say, another 20%. So don't make the mistake of thinking we can just short the top, max leverage, and not blow our accounts up, particularly because just how retail likes to buy the top, it also likes to short the lows. And the last thing you want to do is be short here, targeting down here. But you can see before that happens, okay, like I said, we get this big 24, 25% counter trend bounce. So it's incredibly volatile on the way down. There are plenty of opportunities to take swing trades, but hopefully you can see that whilst I often come on here and nonchalantly say, yeah, we'll just sell the top and flip short, okay, in reality, most people are still going to F this up. Most people are still not going to be able to make money. Most people are going to short at the wrong time. Most people are going to buy the dip the entire way down. And then, of course, it goes back to what I was saying about when we had that Black Monday sell-off and risk happens fast. Okay, a lot of people said, just buy the dip, bro. Okay, they didn't think there was any possible way this dip couldn't resolve to the upside. And so far, they've been correct. Okay, and hopefully, we don't see a lower high that rolls over like this. Okay, but keep in mind, we have just seen a real-time example of how little ability people have to manage risk and mitigate against downside moves. We've just seen in real time an example of how almost nobody has the ability to just sidestep and sit on the sides and wait for momentum to return. Everyone has been trained to buy the dip, and you're a coward for not buying the dip, and buy when there's blood on the streets and all of this stuff, okay? And make no mistake about it, just because people think they're going to sell the third and final angle, there'll be 1, using too much short size, there'll be 2, buying every dip on the way down, okay? There'll be 3, seeing a correction like this play out and say, well, that wasn't the low, but this certainly will be. And then we get this, and they go, ha, told you so. And there'll be screenshots of profit from them buying the lows up here, only for this thing to continue to do what it usually does after a third angle violation. So we are getting close, I believe, to seeing a third angle. I do want to be selling and flipping short there, but I also wanted to point out that just because I say it like that, just because I make it sound easy, does not by any means mean that it is easy. Like I've said a million times already, 90% of market participants are going to blow their accounts up. Most of those big accounts, like I keep saying of late, are going to go on holiday. They're going to have family issues come up. They're going to need to take some time off for their mental health. And it is because once this third angle breakdown occurs, they're all going to be screaming buy the dip. They're all going to be buying on leverage, thinking this comes next. And of course it won't. Just like it did here, doesn't necessarily mean it will the time after. Remember, with hindsight, it's very easy to look back when we can see into the future and say, well, yeah, 3 angles, that was the perfect sell. But in reality, when we can't see into the future, it is a lot harder to deal with. Undeniably, we've done a very good job of catching this thing of trading in and out the entire way up. And if the base case hypothesis continues to play out, then we will continue to stick with it until invalidated. So I hope you found that useful. I hope you will consider what I said today. I hope you enjoyed something slightly different to the normal content. I did have a couple of tabs I wanted to point out just before we move on, and that is back in December 2008, the NBER, which remember is the National Bureau of Economic Research, these are the people in charge of officially declaring a recession. They've declared the recession had started December 2007, an entire year later. They will always be late to officially declare recessions because they don't want to tell everyone they're in a recession and then have everyone flee the markets. They need people to buy the dips on the way down. So many people are currently saying, well, GDP isn't negative, we can't be in a recession. And it can take 6 to 12 months for a recession to be confirmed. By the time it's announced, it's usually nearly over. And I have been making the case that when the NBER go back and officially declare a recession, I think they're likely going to tell us we've been in a recession since June or July of this year. And again, I point out that if you look at the unemployment rate at the hard right edge, okay, it looks like it's about to spike just like it does in every other recession. At the same time, the US GDP is trading right around the levels that it always was historically, right before a recession actually occurred. So just because this thing looks positive now, don't make the mistake of thinking that the NBER can't come out and declare we've been in a recession since June or July of this year. I'm still sure they're going to do that. And I think the unemployment rate with a bunch of other macro data is supporting that. But until people officially realize that we have indeed entered a bear market and we have indeed officially seen a recession be declared, then there is still time to see higher prices, hence our current long posturing. We've got a full-blown Bitcoin bull market, allegedly due to start when the money supply explodes. And guess what? It is breaking out. Okay, at the bottom you can see it is starting to break out above a long-term base that goes all the way back to 2021. And there is still, most probably, significantly higher for Bitcoin to run. You can see where we are today, okay, for the GMI Bitcoin cycle top finder, nowhere close to the prior highs that we saw, okay? Nowhere close, not even halfway to prior tops. So even if this top ends up forming something like this, which would be significantly lower than all prior tops for this indicator, that still says that we've got quite a long way to run to the upside. So in the short to medium term, okay, the closes this week are going to be important. We've got some longs on at the moment. I am hoping that what we're going to see is breakout retest resumption, and that should be the signal for me to get back to full exposure, looking for those third and final angles to come in a little bit later in life. There's always a chance that the third and final angle is already set, by the way. This could well be it. So I'll leave this here as a temporary third angle. We'll be looking to cement this as soon as possible, but of course we've got to wait and see if that wasn't a lower high that resolves in lower lows first. Overall, long and strong unless we start to see true technical breakdowns. And again, as I said, if we do resume up from here, if we close the week above yesterday's candle, then I will be taking that as a signal for me to get back to full exposure in anticipation of this third and final leg to the upside. Here's the S&P 500 back above its second angle, looking potentially for breakout retest of the red resumption, and then we can use that as our third and final angle, and again that will be me getting to full exposure. The Dow Jones also working on breakout retest, possible resumption before that third and final angle, also possible we've already set it somewhere in here. Okay, so a pretty wild time to be alive. Few more candles and we will have Camel officially committing to third and final angles and officially looking to sell the breakdown and flip short on those third and final angles. Other than that, we are looking for a cycle low in gold. I don't think that's it. That doesn't quite seem good enough or deep enough for me. So we are getting into that timing band. We're on day 21, so sometime in the next few sessions, we should be looking for a cycle low. And again, that is an opportunity for me to add to positions. I'm noticing silver. I think silver's cycle low is already in back here, so it's quite early in its daily cycle. This is something like day 11. So silver's probably got a good couple of weeks to run. And I would think that breakout is coming in the not too distant future too. I really would think that we're going to see a big push. And Bitcoin, I see a whole heap of bearishness out there. Even posting a little bit of bullishness has people getting really quite angry with me on Twitter. there's some people that just, every time you say things like, I think it's possibly getting bullish there. Okay, there's no certainty in what I said. It's just, I think it's starting to look a little bit better than it did a few days back. And I see people get quite angry about that, which is quite interesting. I don't know why you'd get angry at another man's trades. Okay, if you don't agree, just counter trade me, sell your Bitcoin, go short. I don't really care, right? That's what makes a market. But anyway, my position is quite clear. Okay, you can see the entry in grey here, 60,189. You can see my stop loss, 52,600. As always, trades called out ahead of time, members notified in real time when I pull the trigger. And I'm long and strong and I'm public about it because I'm actually a trader, okay? Unlike most people that are very quick to criticize but cannot call their trades out ahead of time, do not want to show every single one of their positions. I actually call them out. I actually show you where the invalidation is. And right now, as I've been saying for a long time, I think it's now or never, okay? Either that is a cycle inversion, and we've got a day 30 cycle inversion, a fresh cycle ahead of us, and a new weekly cycle, or we've got a rollover again, and we're probably in for some tough times, a little bit more downside. So it's either now that we go, or it's never, and I am betting on now. It's as simple as that. I like the setup. I think that this is likely going to resolve to the upside. I think what we're most probably going to see is something like this, and then a big breakout. And if I didn't think that, of course I wouldn't be long. But I'm currently long, and as always, if I'm wrong, okay, I'll get stopped out. I'll let you know because this is trading, okay? It's not about being right or wrong. It's about managing the risk and trying to take more money from the market when I'm right than I do when I'm wrong and I lose. Overall, though, I kind of like the setup. I do think we've probably got a new daily cycle and a new weekly cycle ahead of us, just like in yesterday's video when I was talking about seeing something like this come out of here. Okay, we're already on about day 16, somewhere in this neighborhood. And as I was saying yesterday, it took just 35 days to make a double from the lows. 35 days to make a double from the lows would put us somewhere around 100K, maybe slightly below in the next 34 days, something like that. So that's what I'm betting on. Time will tell as always. Closes for the week will be very interesting, and the dollar is looking pretty heavy, so that is also pretty interesting too. As ever, I'll come back tomorrow and I'll do a weekend deep dive where we'll re-examine the base case hypothesis on the channel. I will also be putting out a video for the level 3 members and go over all the crypto related equities and a few extra precious metal positions as well. And of course, I'll be talking about getting to full exposure on the S&P 500 over the next few days. Other than that, I hope you had a fantastic week. I think this week's been a pretty interesting week. I've certainly enjoyed myself, and I hope you're doing well in life. Until next time, take care from me. All the best. Cheers. Bye.